Hi everyone, see you again with me, Budi Setianto. Today we are discussing about Indonesia market outlook for year 2014. So all this research done by stock valuation calculator by independent market research. So next we take a look what is the country attractiveness in general. So you see that we believe that you know that Indonesia is number 4, the most populated country with over the 240 million population, and also our GDP per capita increasing very fast in the last 5 years. But concerning the stock market uh, investor, approximately only 460,000 investor, which is only 0.2% of the population, which is very, very small. The number of the listed company in the stock market also not quite big, only 480 something. So next we see the statistic, stock market value history between 2005 to 2012. So you see after the global crisis in 2008, uh, the value is decreasing in 2009. That they pick up again in 2010 until today. But the increasing rate is declining again in 2012, and the composition sharing of the foreign investor is 64 to 36, the local. The percentage is increasing much more in the year later, which is 70-30, and the year after also increasing by 85-15. So we see this is a domination of the foreign investor. In fact, the number of the investor, we believe that it's less than maybe 20% of the total number, as we told you, about 460,000. But the value they bring in the market is much bigger than that in an average of per investor. So we see that the domination doesn't change since 2009. That keep increasing. I mean, the percentage keep increasing. So next we see the industry sector share in 2013. So in the composite index, we break down based on the index uh, value, index value from the highest to the lowest. The highest is the agriculture, followed by consumer business, and then mining business. So we can take a look at this picture, at this slides, and then we can conclude that the Indonesian market comprises of mostly natural resources, agriculture, and then mining. So if we combine agriculture and mining, we can get a number almost half, 42%. So we can say that still domination on the natural resources. So let's check the current situation composite index for year 2013 from January to December. As we recorded this on the December 24th. So we display two charts. First chart, red line, is the composite index movement from January, and the green line is we compare with government bond yield during year 2013. Indonesian Composite Index starting off since January at 4,400, and then in the next 5 months increasing and reach to the top 5,250, and then went down and fell down is much more deeper than when it started. It reached the bottom below 400, below 4,000, and then went up, and then fluctuation, and a bit in the 4,600 level, and then after that, in the end of the October, it went down continuously until below 4,200. We can learn from this chart is the composite index fell down in the mid of 2013, and at the same time government bond yield also started increase in the mid-year from around 5.5%, and then keep increasing continuously until today is around 9.5 or not 9, it's around 8.7 something percent. So we can learn from this chart that the market is very sensitive. By the time the government bond yield increasing quite fast, the index, composite index also went down very fast. So there is a correlation that the market is very sensitive against the increasing of the government bond yield. Government bond yields meaning that there is a perception of a global investor toward the country. The more yield they asking is showing that they more cautious, and then they more they want get more safety, and then don't they put more risk by putting the money in the country. So that's why they expect a bigger return than before. So let's compare with the government bond yield in Asian regions. So in this chart we divide it into two two layer. First layer is a lower layer. It is part of this box, the red box, comprised of four countries: Malaysia, Singapore, Australia, and Philippines. The four companies, in average, they are running a government bond yield around 4% or below, slightly above 4%. The second group is the upper layer, consists of Vietnam, India, and Indonesia. If we check Indonesia in the black line, starting off with the government bond yield at the rate of 5.6, 5.7, and then quite stable, but in the mid-year started to increase very fast, and then reached the level of 8.6, 8.7%. Compared to the other two, like India starting off from 8%, went down a little, and then pick up again in the mid-year, and then reach now slightly above 9%, like 9.2, 9.1. Compare with Vietnam starting off from 10%, that decreasing continuously, very slow, and today their government bond yield at the rate of the 9.1 something. So if we check concerning Indonesian market, compare to India and Vietnam, Indonesia is the worst. Not the government bond yield. Maybe the yield at this moment is still the lowest among the three. It's lower than India and Vietnam. But if you see the chart is starting off from 5.5 and then growing up very fast. So this you can tell that the Indonesian market is very risky, and there is some going on in the market that the reaction is very fast, growing very fast. So we can learn some more evidence what's really happening in the market. Next, we see the government bond yield in the world. So we pick up the one in America, and then second in Europe, United States, and then United Kingdom. If you see in this chart, the USA increasing government bond yield in this year, 2013, increasing very high, 70%, the same as United Kingdom, increased also by 70%. Compared to Indonesia, Indonesia is about the same, 60% plus increasing government bond. And compare with China, the biggest country in Asia, they are also suffering the increase, but the increase is not quite big. It's only 25% increase in the government bonds. So next chart, we see the correlation with stock market. As we display previous chart, we see the government bond yield compared to Indonesia stock market. Let's see what's happening in the United States. In the United States, we see the chart from 28 to today. The same thing is UK from 28 2008, and the same pattern is the same. The global crisis suffering and hit those two countries, and then the black chart is the black line. The black line is showing the stock market movement. So in the United States, when the government bond are decreasing quite steep, quite deep, and followed by the stock market also went down, and after that stock market picking up after reach the bottom. The same thing in UK. They reach the bottom around 2500. In United States, reach the bottom above 6000. So they keep increasing until reaching at this moment is 100 or 16,000, and then UK reaching the 6500. But if you look at the development, what's happening in the year 2013, you see in the mid 2013, the government bond increasing quite fast. You can check, and previous chart is 70%, the same as in UK. But the correlation with the stock market, they keep increasing. So the difference what's happening in Indonesia or maybe in Asia. In Asia, we see the China is the same thing. You see there is the red, the black line is the stock market. Stock market is declining when the government bond increasing. Same thing in Indonesia, when government bond yield increasing, then the government bond yield increasing, and then the stock market decreasing. what's happening in different in United States and then UK is because in this country the rate is already very low. So next we see what's happening in the Indonesian, why the collapse suffering in Indonesia, why the economic went down. Is we see the inflation rate. It's the same thing. It's increased in the mid-year from 6 to almost double, 6.6, 8.6, 8.5. And then what happened with the interest rate? Interest rate also from 5.7, 5.8, and now increasing 7.5 is already increased or started increase in the mid-year. The same thing with the exchange rate. Exchange rate also increased from 6,700 now is above 12,000. So that's why the same characteristic happening. So what's really caused the problem? So let's see the Indonesian current account is a deficit, a big deficit during 2012 until today, still deficit. And then how they pay it? They pay it with the foreign exchange reserve. Foreign exchange reserve it keep declining very fast from 125 billion now it's only 90 billion US dollar. So how about the external debt? External debt is the highest in the last 10 years is now is reaching the number is 260 billion US dollar is the highest in the history. So if we check about the Indonesian stock market, Indonesian stock market is especially in the natural resources. We see the effect of the declining in the stock market is the coal price is declining. If you see from 2011 from 140, now it is only at the level of 80 US dollar from 140 to 80 US dollar. How about the other agriculture product? The CPO is the domination in the Indonesian agriculture business is keep declining from 1200 to only 800 at this moment. The declining since 2011. So what's left in the stock market? Is this any opportunity? Yes, we using the stock valuation. The stock valuation we calculate under value stock. We put the in the higher side the optimist side. So we check based on industry. In the we by using our stock valuation, we seek under value stock with asset above 5 trillion. We found the 24 companies, and then if we seeking under value stock with asset above 1 trillion, we find about around 50 companies. So around 25 to 51 company under value stock having 3 years uptrend. So we only pick the year the in the last 3 years, which is the performance is increasing or uptrend. So we see in this industry, we check on the finance, property, and the trade is the domination. So if we check the next slide is a conservative one, we find the 12 and companies under value stock with asset above 5 trillion, and then we find another under value stock only 32 with asset above 1 trillion, so about 12 to 30 companies. So what's happened with the company with strong fundamental but already overvalued? So the same is only finance sector, property, and trade. So we find the attractive stock having asset above 5 trillion only 41, speculative stock having asset above 5 trillion 48, and then in the index most liquid 45, we find 18, and then attractive only 10. So there's still another opportunity. Some big strong fundamental company, even though they already I mean overvalue, but we expect the recession, the downturn will continue next year. We don't know because government doesn't have any solution how to pay off the debt, how to pay off to cover the deficit. Uh, well, we only see only two solution is increasing the export market, which is very difficult because we are entering in the WTO. There is no protection, and because the local industry is very weak, and then we let the import product come with very low tariff, and we cannot make subsidy or support the local company. So that's why the local product is not competitive compared to product from India, from China. So it's very difficult to make the solution, the right solution by increasing the export. It's very of course, if we have to terms against WTO by putting the high tariff, and by putting or giving the subsidy to local product. The second thing, the solution, the short term solution, that increase the debt. It's very difficult. Indonesian credit rating is declining, and also the number or the debt level is very high in the last 10 years. So the ability to pay is very low, so very risky. So I don't think the creditor will add up more debt to Indonesia to be able to cover the deficit. So maybe this is our homework, but in the stock market there is still an opportunity if we get more patient waiting for the price going down. So thank you for this time. This is our presentation, and then next time we can get more updates. So see you soon. Thank you.